Thank you everyone for joining us. Welcome everyone. Thank you for participating in today's Tech on Tap event, SoCal's investment landscape and how to access capital. This event is part of Glendale Tech Week, a week-long event of series with plenty of options to network with like-minded tech professionals and investors. Our next Glendale Tech Week event will be taking place tomorrow, September 22nd, from 4:30 p.m. until 8 p.m. Pacific time. This event will be the Pitch Fest and Closing Awards ceremony. You can join us in person at Hero House Glendale or virtually on our social media platforms live streaming. Seats are limited, so please RSVP as soon as possible to reserve these tickets. With that being said, let's get started. Today is a very special Tech on Tap event because it covers a topic that many startups and tech professionals find interest in, the SoCal investment landscape. And I can't think of a better way to cover this topic than having SoCal's very own Alliance of SoCal Innovation do a Tech on Tap topic to cover this topic. Today we are joined with two special guest speakers from the SoCal Alliance, Eric Eide, Director of Ecosystem Development, and Raychel Espiritu, Venture Outreach Manager. At the Alliance, Eric is responsible for VC engagement as well as innovation community building efforts and startup communities. Eric is an economic development professional with experience spanning the private sector, government, and academia. Before joining the Alliance, Eric grew the government relations team at Bird. Previously, Eric served as Director of International Trade for Los Angeles Mayor Eric Garcetti. Raychel specializes in brand awareness, business development, community building, social media, and paid advertising. She loves being a connector in the SoCal startup ecosystem and oversees the SoCal Venture Pipeline program sponsored by Silicon Valley Bank. This program sources, vets, and matches leading Series A ready startups with a highly curated list of leading institutional investors. Before we get started, I'd like to make two very quick announcements. The first one is we have a giveaway going on today. Typically, our Tech on Tap events are in person. Due to the COVID-19 pandemic, we have done a virtual programming for everyone's safety, but we will still do a giveaway. So stay tuned to the end to win a very fun giveaway. The second announcement is before we begin, and not really an announcement, but we would like to know who our audience is. So in a minute, I'm going to share my screen, and I would like everyone to participate in this really quick survey. It's through Mentimeter, and it's to better understand who our audience is. And any second, you should see it on the screen. Please visit www.menti.com. Once you join this website, it will ask you to provide a code or input a code. Please put 89033449. This code can also be found on the screen. The first question you'll be answering is explain who you are using one word. You could say founder, investor, student. Describe yourself in one word, and then that word that you place will be placed on our screen. So I'll give you a minute to do that. We have founders, we have investors, we have an innovator, advisor. We have an individual that's in marketing. Nice. Connector. I like that word, connector. We have a student, someone in nonprofit. Perfect. So the larger the font, that means there are more individuals in this audience that can relate to that word. So seems that the majority of the audience members are founders or are in marketing or nonprofit and innovators. All right, we are going to go to the next question. And the question asks, are you currently seeking funding? So it's a yes or no answer if you're currently seeking funding. Seems like a majority are currently not seeking funding. Perhaps in the future, they might be interested in seeking funding. We have 5 that are. Give it a couple of more seconds. All right, perfect. I'm going to stop sharing the screen. It's still good to know how to access capital because you never know when you will need to know that information. So with that being said, I'm going to hand it over to Eric and Rachel to begin the presentation.
John, thank you so much. And I want to thank the entire City of Glendale team, Sandra, Annie, John, the whole team that stands behind you. You guys have been awesome partners and really love what you guys are doing in Glendale to really lift up the community and celebrate its successes. And so happy to see Glendale Tech Week back on and with a whole host of events. You know, we're just thrilled to be part of this celebration. As many of you already know, Glendale is a hot emerging tech ecosystem within the Southern California kind of ecosystem. It's got great companies like ServiceTitan and LegalZoom that show what startups can achieve and what's possible. They're amazing kind of role models in the community. The city also has great innovation assets, whether it's Kids X Accelerator or the Hero House Accelerator, and obviously has world-class corporations like Disney and Warner Media in its backyard. So all this is great news for startups. But in addition to a vibrant and supportive ecosystem, founders often need access to venture capital or funding to realize their dreams and scale their business. And so that's going to be some of what Rachel and I talk about today. We're going to talk about how SoCal stacks up to other US innovation hubs, some of the technology areas that our technology companies excel at before turning to investment trends. And then I will hand it over to my colleague Rachel to kind of do a deeper dive talking about a crucial funding gap in our SoCal innovation ecosystem in terms of funding and a solution to really bridge that gap. So we're really excited about it. So that's kind of our agenda. I'm going to share my screen. And without further ado, we'll kind of start the presentation. First, a word about the Alliance, in case you're not aware of who we are. We're a 4 years young, not-for-profit organization that was founded in 2017 with the vision of really trying to knit together Southern California's dispersed innovation potential and help founders make it easier to grow their companies here. And we really do that through a super connector role, connecting various stakeholders, whether it's city government, venture capitalists, corporations, founders, or innovation advocates together behind key projects so founders can have more success growing their organization. So this slide is outdated, but it will give you kind of a sense of some of the folks that are supporters of the Alliance. We first started with research institutions, so we've got all the research institutions in Southern California that are on our board, including Caltech and UCLA and USC, which are all kind of a short distance away from Glendale and provide a lot of the talent. We also have world-class R&D innovation companies, a number of ecosystem partners throughout the region. And we just launched this year a venture capital program and now have 20 leading VCs that are that really prioritize engaging in the ecosystem that are part of our work and involved in kind of getting involved in the innovation ecosystem. So that was a little bit about our network, but we try to span key stakeholder groups, as I just mentioned, and we've got programs to really connect the dots between those areas. And so on the right, it's really kind of a snapshot of some of the programs that we've developed during our history. We're going to be kind of really zooming in, or Rachel, my colleague, is going to really zoom in on the SoCal Venture Pipeline, which is here down in the bottom right quadrant of the slide, as one area that where founders can be connected to investors that are likely to invest in them. Okay, so let's get to it. So how does Southern California rank amongst US investment hubs? So Southern California is ranked number 3. It's second behind the Bay Area and New York City. SoCal has the 3rd highest number of tech startups in the country at 3,750. And venture investment is roughly 60 billion from the years 2015 to 2019. Now, SoCal trails the Bay Area, which has almost twice as many startups and a lot more VC dollars up there, as you might imagine. And New York has 5,100 tech startups and 67 billion in venture investment, but leads Boston and is really kind of growing. And on the right, you can kind of see how this breaks down across Southern California. Los Angeles is obviously the largest ecosystem here, followed by San Diego, Orange County, Ventura, and then we'll do a deeper dive on some of the other kind of outlying areas in the Southern California geography and where they fit in. All right, so 2020, which is the last full year of investment data we have, LA actually overtook New York as the top investment, the second highest investment destination, and it was up 40%. We'll see this year if we're able to catch New York again, but I think this is kind of great news for builders here in Southern California that we're increasingly able to compete with our top peers to support and help grow amazing companies. So while the investment values have increased in 2020 in absolute dollars, fundraising has been relatively consistent with previous years across innovation hubs. And you can see Los Angeles in pink. You know, we are trailing Boston and New York, but we are one of the major players here, and you can kind of see how some of these others stack up lower down. And John will help us share this deck, a version of this deck after the talk. So if you're interested in these slides, we'll get them to you. Now, one of the things that really is unique about Southern California is our diversity. And we often talk about this in terms of identity and kind of we're certainly an international region, but we also mean it in terms of geography and industry. And here you could really see that we're widely dispersed in these kind of top investment area or these top tech areas. The largest category in SoCal has 21%, and that's software and tech. And if you compare that maybe to the Bay Area and Boston, you can see that they're much more concentrated. You know, the Bay Area is much more concentrated in software and tech, and Boston predictably is much deeper in health-related technologies. So we think this is an opportunity for convergence, for combining new industries in novel ways. And you could see that right here in the backyard of Glendale with entertainment and tech really converging and creating new ways of consuming media. But it's also a challenge in the sense that we're not good at one thing that's easy to talk about. You know, it's easy for Boston to say, hey, we're the destination for healthcare, but we're good at so many different things. Sometimes it's hard to get that story out there. And so that's one of the things that the Alliance is continually trying to do, is trying to find that critical mass and connect people across these really vibrant technology areas. Now here's kind of a little bit deeper dive with in comparison to NorCal. And what's interesting here is we're at least as strong or have more depth in terms of absolute number of startups in every category listed here, with the exception of software compared to the Bay Area. And at the bottom here, environmental technology, recreational goods manufacturing, and defense and transportation, we're in fact much stronger than the Bay Area. So there's a lot of amazing technology that's unique to our region here. And wanted to get a sense if there's, you know, if any of you as founders are kind of building in these areas, if you could kind of raise your hand, you know, on the screen using the chat function. It'd be kind of cool to see if from any of the founders here, or you could drop in the chat, even if what kind of area you're in, and that would be really kind of helpful for us to kind of know what you guys are up to, and we might be able to address that. So that's cool. So yeah, as we go on, just you feel free to introduce yourself and what you do and kind of where you're at. I'm going to continue to plow ahead in the presentation here. So this, I love this slide because it really shows us catching Northern California in kind of absolute numbers of startups. This doesn't speak to like how many of these companies are getting funded, which still really skews in Northern California's favor. But you know, 1,336 is basically at Northern California's 1,340. You know, Los Angeles County is by far the highest concentration of startup activity, and that's not surprising given that we're the most populous county in Southern California. We've got about, LA County has about 10 million out of about 24 million in Southern California. But Orange County and San Diego are also big producers of startups. And one big surprise, at least for me, was that some of these much less well-known innovation hubs, Riverside, San Bernardino, Ventura, Santa Barbara counties, and other fields, still comprise roughly 14% of the of total startup activity. And there's a lot of people, you know, looking to raise that number. And so increasingly, you could build your companies anywhere. You obviously need good talent, and you need innovation assets leverage, and often you need capital. So what are Southern California innovators good at? Well, one of the things that really kind of characterizes us is our deep technology, and that's because we've got 5 out of the UC systems, UC research schools here in Southern California, Caltech, Harvey Mudd, a number of institutes that really help us do kind of deep technology, kind of coming out of the universities. And I'm going to talk a little bit about that. You can see some of the big innovation hubs here in Southern California highlighted on the right in yellow. And if you were kind of, if you were able to add these up into one region as like kind of the, you would see us much higher on the list, but we're still producing a lot. Now, like the previous slide that I showed, we do have a lot of diversity here in the deep tech field as well. Our biggest category has less than 30% market share, and that's artificial intelligence. You compare that to the Bay Area or New York, they're much more dominant in artificial intelligence. And I think New York, they use a lot of this in the kind of fintech or banking industries, which really drive that. But again, this is an opportunity for convergence. And you know, it really speaks to kind of the diversity of our ecosystem. Okay, now we're going to start to kind of turn to investment trends in the region. So, you know, as you might expect from kind of our diversity of industry, we also are much more distributed across industries compared to U.S. ecosystem. Compared to other US ecosystems. And you can see some of the dominant trends here. So venture funding is much more diversified. It's also much more kind of emergent here in Southern California. Our own seed kind of venture capital ecosystem has grown dramatically over the last 10 to 20 years. At the later stages of capital, we still trail places like the Bay Area, and a lot of our capital, you know, is still imported from outside the region. And what that means for our founders is it kind of raises the bar when they go to pitch a venture capitalist. They're often pitching at that first institutional rounds, which we call Series A. They're often pitching them kind of cold when they don't have that personal relationship. And so it puts them at a little bit of a disadvantage in trying to kind of secure that investment. But we're bullish. We're already seeing a lot of VCs kind of moving from smaller funds to larger funds on a successful track record. And so we're continuing to see more and more VCs writing checks at larger amounts at later stages. And we think this trend will continue. So I talked a little bit about the seed investment. It's really taking off. I mean, the first half of 2021, and this data is from Amplify's 2021 LA Seed report that was just released, but it's 330 million across 116 startups. And you can see some of the breakdown here. Obviously, SaaS continues to be a very strong category in the seed category, but you can see, e-commerce, marketplace, and mobile are some of the others that are also receiving a lot of activity in terms of investments from seed funds. Now, as I said, the SoCal's weighted to early stage, but there's a huge opportunity for VCs that write larger stage checks. And the challenge, as I kind of noted, is a lot of that later stage capital doesn't live here in Southern California. But they increasingly know the opportunities down here. They see the huge valuations from like Service Titan, or they see the success of Snap or Bird or other kind of consumer tech, which is really kind of characterizes the Silicon Beach ecosystem. Nonetheless, for places like Glendale or Pasadena, or much less Riverside, those venture capitalists who are flying down from the Bay Area may not always get to the other side of LA County to kind of see the deals in your neighborhood. So that's still something that we're trying to bridge that gap. But the Series A, which is the first institutional round, comprises about 26% of absolute dollars in SoCal, based on this data. And I should note that BCG, Boston Consulting Group, which is a strategic partner of the Alliance for SoCal Innovation, helped us pull together a lot of this data and that I'm sharing with you today. So here's kind of a more county by county breakdown of the top 3 counties in Southern California. And you could see startup activity over this 9-year period has increased $4 billion. 10 billion, from 4 billion to 14 billion. And LA is really seeing the lion's share of that increase. Although San Diego and Orange County have grown as well. So overall, over this period, 223% rise in the 10-year investment increase, which is pretty spectacular. And that's helped a lot of founders grow their business. Yet, the challenge is the pie is growing much faster than our share of it. So in percentage points, we've actually declined relative to all the capital out there. So even though we're commanding and attracting more dollars, we're the ones that are invested here are a smaller percentage of the overall venture landscape in the US. So a couple key takeaways from kind of some of the slides that I've just showed you. Southern California is a leading innovation hub. We're super diverse in terms of industry, talents, and geographies, which is both an asset and a challenge to navigate. And I did neglect to mention that our individual diversity is really a huge asset as well, that helps us think differently and allows us to kind of approach problems in new ways, which we think is a core kind of superpower for our region. Local capital is growing, but slower than the total amount of capital outside the region. So, we'll continue to kind of watch the VC landscape. Funds are continuing to raise bigger funds, but there's just a lot of capital nationwide right now. And so we continue to try hard to kind of help our region stand out and help our founders get connected to the investment opportunities that'll help them grow their business. And we do think there's a huge opportunity for later stage investment. And so, one of the questions that Rachel and I spent a lot of time thinking about is how do out-of-town investors find great companies in places like Glendale? And so I wanted to take a moment to kind of pass the baton over to my colleague, Rachel, to kind of walk through some of the solutions we've developed at the Alliance for SoCal Innovation in partnership with some of our partners to really try to bridge some of these gaps. Rachel?
Wonderful. Thank you so much, Eric. Hello, everyone. My name is Raychel Espiritu. I'm the Venture Outreach Manager for the Alliance for SoCal Innovation. Just a brief background. So before joining the Alliance, I was at Make in LA. It was a hardware pre-seed and seed venture firm and startup accelerator. I've been in the digital marketing space for over 12 years and worked closely with startups and as well as with founders. and just really excited to be here. Thank you, John and Sandra and Annie. And I do see some familiar faces in the audiences. I met John at a LA Tech Wellness event, and I see George and a few other people. So I'm glad to be here with you all today. And so I'd love to share more about SoCal Venture Pipeline, a program that we launched this April. And really, what, like Eric mentioned, we're addressing the access to capital challenge. There's a lot of great companies here, but not a lot of later stage institutional capital, and VCs see the potential. We also know the lack of access to capital challenge that exists for women and for minorities. So this program bridges that funding gap, and the goal is to help more great companies get funded. And really, we're looking for founders that are going after their Series A raise. And essentially that's institutional capital, which we've defined as 4 million and above. And some general indicators which would qualify a startup for this program would be they've already raised 500,000 of angel or seed investment, a dedicated team of at least 3 people, their product is in the market, and most importantly, demonstrating market traction, revenue, or users. So depending on the business model, you can be pre-revenue, but really showing significant traction in terms of gaining users. And we're accepting any technology-enabled startup, just nothing in the life science or med tech, just because it takes a little bit longer to vet and qualify those particular startups. But if you fit these specific qualities here, I would love to connect with you after this, and I'll put my contact information in the chat as well. And so what do you mean by institutional capital? And if there's any first-time founders, early stage founders that are still exploring, I know the world of venture capital can be a bit complex and opaque. And so to really dive in a little bit deeper of what we're talking about in terms of different funding rounds. So pre-seed, that's essentially when you're validating your idea, right? Building your MVP. And pre-seed is pre-institutional. So this can be friends and family. There's different accelerators and incubators, and often the check size is below 150,000. And so the pre-seed is really to help validate your idea. And then a seed round is, you have to think seed the same as planting a seed, right? Where this is the first official equity funding round, and really what your startup would need to get the business plan and initial operating expenses, whether that's hiring staff, research and development, payroll, insurance, like all the foundational aspects of what it takes to grow a company. And so Series A is the growth capital, right? You've proven that your business works. You've proven your idea. You've identified product market fit. You're at that inflection point where your startup is growing and you need additional capital to continue to grow. And then beyond that, Series B is additional growth capital. So you have to think in terms of marketing or business development, additional expenses that would be incurred as you continue to grow your company. And so now that we're all on the same page in terms of what Series A capital, institutional capital is, I'd like to go back to our program and share a little bit. And I affectionately like to, refer to our program as we're like the Bachelor for startups, where we help startups, connect to investors. So on the back end, we have Mike Kren with Connect, San Diego Venture Group. So San Diego has a similar problem in terms of accessing later stage venture capital. So Mike Kren has a program, it's called Cool Companies. They get 10 startups funded each year. And as a result of the work that he's been doing, he's brought in over 650 million of Series A capital since 2015. He has a great network of VCs nationwide, over 400 active funds. And because of the work that he's done and the relationships that he's built and the process of vetting great companies and doing strategic introductions, the VCs are eager for more deal flow. So essentially we've taken that framework, expanded it across the region, and opened it up to all SoCal-based companies. And how it works, so this is our pipeline process. We have referral partners. We're working closely with different incubators and accelerators and seed funds, as well as some direct founder outreach. getting us to, refer great companies. And we have an online submission portal. And so again, this program is free. We don't charge any fees for companies. We take zero equity. It's completely free for founders. We're here to help and support founders. The online submission portal is an application where you can submit your pitch deck and key financial information. From there, we have an amazing team of community leads, all people who want to see more startups get funded. From there, it's sent to a community lead to review the application. They make sure they look at the application to see if it is in fact this company that's ready for Series A investment. Because again, it's important that we send good deals to VCs. That's how we're able to continue to operate this program. And from there, once a month, we have an investment committee that reviews the applications, and we come to a consensus. Is this company in fact ripe for Series A investment? Are they ready for VC intros? If the answer is yes, we do what we call a scrub session, where we connect with the founder. We get more details about the company, kind of dive in and also help poke holes a little bit and get the founder polished and scrubbed up and get them ready for those intros. And so, to go back to the Bachelor analogy, we help get you ready for the first date, right? Where we help the founder get ready, because it's important to become prepared and be able to have the right answers for questions that VCs will ask. Ultimately, we're here to help founders get set up for success, because once the intros are made and the meeting is set, the founder is able to knock it out the park, hopefully get a term sheet, and companies get funded. And again, to go back to analogies, the rising tide, right? As the tide rises, all the boats elevate. And for us, the goal is to get 10 startups funded by the end of this year. So we are looking to connect with more great companies, especially here in SoCal. So if this is you, if you're a founder that qualifies, would love to connect with you. Or if you're an ecosystem organization leader, would love to connect with you as well. And yeah, moving on to the next slide. So we're going community by community in terms of rolling out the program. We've launched in Pasadena, Ventura, and Santa Barbara, as well as in downtown LA. And now we're just starting. This is our official launch into the Glendale and Burbank area. We also continue to expand in Orange County, Riverside, South Bay, and continue across Los Angeles. And these are some of the events that we've been able to share our program at, in terms of we had a launch event back in April, and would love to invite you all to our next event, which is October 12th. It's a Meet the VCs event. It's going to be a virtual event on Zoom. We have a lot of great VCs who will be on the panel talking about what deals they invested in, why they invested, and again, really diving in a little deeper of what it means to be Series A ready. So I invite you all to join us. I will put a link in the chat to the Eventbrite. It's free to attend. I would love to see you there. And that's it on my end. And yeah, here are the links to the landing page and the application. I'll also put these in the chat as well. So feel free to reach out with any questions in regards to the program. And that's it for me. Back to you, Eric.
I think it's been great to chat with you all. I think I'm supposed to hand it back to John to kind of wrap up and take care of next steps, or if we're going to turn to a Q&A session, also happy to take questions.
Yes, we'll go ahead and do a Q&A session, but before we do that, a big virtual round of applause for that wonderful presentation. Great work. That was very informative. Thank you both, Eric and Rachel. Very informative, and I really appreciated how you provided a comparison to different tech hubs. Many times I'll hear key data, key statistics on the SoCal tech scene, and I'll be like, great, but what does that really mean? And your comparisons really allowed me to see why SoCal is more unique when it comes to selecting an area to locate. I know many participants may have questions prepared. If not, you could get them prepared while we speak, but we do have time to kick off a Q&A session. So to kick that off, I have a question I'd like to ask myself. I really enjoyed, there was this one slide, Eric, where you illustrated the various sectors in each area. It showed software, health, finance, consumer, media, real estate. There were all these different sectors, and you were discussing how SoCal has a variety of each sector. Um, my question is, many startups, when they're looking to locate, they'll only locate or they'll want to locate in an area that is highly concentrated within that sector. For example, if it's a health startup, they only want to locate in an area that's concentrated with health startups. In your opinion, my question is there an advantage to doing that, or can a startup be equally, if not more, successful when locating to a startup that has more diverse sectors? Is there a difference? I know you mentioned there's collaborations that can be made, for example, health and perhaps media, or if there's two varying sectors, is there a difference? Is there a higher chance of success?
Yeah, so generally, all things being equal, kind of density matters for innovators. Being able to bounce ideas off, get inspiration from other people who are working on similar problems can be very helpful in helping not only you figure out new approaches or solve problems, but also help create a community that is really important for founders. Being a founder, an entrepreneur, is so hard. You have to figure out so many hard problems. You work crazy hours, and it's really important to have a community that understands you. And I think founders are a unique breed. They do well when they have their other entrepreneurs to connect with and commiserate with and pull each other up. So I think that does matter. I think, and there is a strong kind of body of research out there on agglomeration, which is really density in industry that really provides economic development benefits. And that certainly applies to startups. And it's part of the reason why Silicon Valley and the San Francisco Bay Area has become so strong, is because there's, venture capital, startups, universities are all kind of have this revolving door of people moving around, working on things together to really create that vibrancy. In Southern California, we're challenged by our geography and our urban kind of landscape, which is highly dispersed around kind of our freeways and cars. But nonetheless, when we first started working with Boston Consulting Group around our business plan and really tried to understand how the Alliance was going to make a contribution to this massive ecosystem, we looked at density, and we did find that Southern California wasn't one place. It was a collection of 14 innovation nodes, and Burbank and Glendale was one of them. And it's really what Burbank, Glendale area, as you might imagine, was really strong at entertainment, right? And now with the convergence of entertainment and tech, it's becoming kind of a powerhouse in that industry. But there's other pockets of industry across Southern California. So if you do med tech, med device, you should go to Orange County. It's the top place in the country, and it's right here in Southern California. If you're into consumer tech, maybe that might make sense to be on the west side of LA. Life science, San Diego's huge and really vibrant there. So part of understanding Southern California and where to find your tribe is also understanding what areas are good with what. And then it also comes down to personal preference, right? Like, who are the people that give you energy? Who are the people that you want to collaborate with? Do you need to be close to a university? Do you need to be close to other kind of other folks? And so I think it's up to the founder. But I think if you know where to look, you could find what you're looking for in Southern California, and certainly in Glendale.
Great, thank you. And I like that very last part where you said in Southern California, it won't be hard to find the sector that you're looking for because it's all here. And as you mentioned, there's 14 different nodes of sectors within Southern California. Thank you for that. I ask if anyone has any questions, feel free to write them in the chat or unmute and ask the question. We'll give you a couple of minutes to do that. I see we do have one question asking whether the slides will be provided to the attendees. Yes, they will be, and there will also be a recording on YouTube that will be shared to all attendees as well.
Can you just elaborate a little bit more Hi guys. Elaborate a little bit more on what exactly you're looking for in those 10 startups that you're trying to get funded.
Want to take that, Rachel?
Sure, happy to do so. So we have 5 companies that have been accepted. We're looking for 5 more, but we don't have a limit per se. So the difference between our program and other cohorts or accelerators or incubators is we don't have a cutoff in terms of the number of companies we can accept. It's just important that the company is Series A ready, right? So Series A ready would mean that they're really at that point of inflection and growth, that they're, in terms of finding that product market fit, the product is out there, they're demonstrating traction, and what traction looks like is 20% month over month growth, whether that's revenue or users. Revenue, of course, is important, right, for a startup, but doesn't necessarily have to be. Depends on, again, if you're a consumer product, consumer mobile app. I mean, think of Clubhouse, right? Doesn't have any revenue, but they've been growing a lot of users. Just as an example, but really, we're looking for startups that are looking to raise their Series A round in the next 6 to 12 months, and the timing of the program, takes about 2 to 3 months to move through. So if you're looking to raise maybe Q1 of 2022, would love to talk to you. It'd be a great fit in terms of timing as well. And I hope that answers the question. Eric, anything else?
I would just like to add, I mean, I know there are founders on this call. If you're a founder and this sounds like kind of where you're at, we'd love to talk to you and answer any questions you have or see you apply. If you're not a founder and you work with founders or know founders, and this sounds like a program that might be a fit for them, we would love to hear about them and would love for you to tell them about this program that might be able to help them out. And then finally, I wanted to add, because this is our official kind of rollout to the Glendale tech community for this program, we are looking for more community leads to be involved. We've really tried to architect this program to tap into local insights that community builders and people that work closely with entrepreneurs have. So we would love to find somebody in the Glendale community that we could talk to when a Glendale company applies, go, hey, what do you know about this company? What are we missing anything? Is there something that we don't understand and that could vouch for you? And kind of be able to talk about what a great business team or technology you're developing. So if you're kind of in the Glendale innovation community, have a sense on what makes an investable company, we would love to hear from you and see if we might be able to get you involved in a more formal role for this program.
Great, and I'm going to place your contact information in the chat. While I do that, we have another question in the chat from Avi. Hi, I'm a co-founder at Famished Inc., an early stage startup based in Los Angeles. What programs do you recommend for startups at an earlier stage than what Alliance for SoCal Innovation partners with?
I could take that actually. So I have a list here of different resources for founders. Founder Institute is an organization that has done a lot of this great work. We also have an internal resource list as well, and feel free to reach out. If I learn more about your company and the specific industry and sector, I'd be happy to facilitate any intros. But I'll put a link here in the chat to that resource. And then Eric, we have additional resources as well, correct?
Yeah, I mean, we know a lot of the people that are in kind of the innovation ecosystem business across Southern California. We know people that kind of have industry specialties. We know investors at different stages. So there might be somebody that we could refer you to. But I think, Abhi, I think it comes back to the key thing on knowing how best to help is understanding a little bit more about the stage you're at. Are you developing an idea? Are you developing a prototype? Are you really, do you have your product or service out in the marketplace? Those kinds of questions will likely drive kind of some of the help you might need. And there's also, community people involved on this call. I know George from Untapped Venture Studios here, and he's helping startups and There's lots of other people in the community too that I'm sure would be happy to provide advice, but we certainly could be a resource. And on our website, there's resources at the Alliance website that we could also share, which have some of the resources that might be helpful in navigating Southern California.
Great, and I see George has, thank you, George, for including the information in the chat. I believe we have another question from DeForest. Clearly, the hard work is done at the seed stage, a place where the check writing seems to be vanishing. This might be an area better suited for the city of Glendale, but all VCs desired. Thank you, DeForest. Correct, I agree. Oh. All right, I believe there's a question incoming. And do feel free to unmute if you prefer to ask the question directly. Feel free to do that as well.
Thank you so much. Hey, good evening. This is DeForest Mapp with Side Street. I'm absolutely having a wonderful time being immersed in the insight from various individuals around Southern Cal as founders such as myself continue to solve our problems and raise capital and get our platforms into the market. My question is centered around how can people who are writing Series A size checks be more instrumental in helping founders who are at the seed stage get to them, because everyone wants to mitigate risk and, do their due diligence, and deservedly so. But the hustle and the bustle and the grit and the grime and all of that stuff is done, in my opinion, prior to to Series A. So was curious, what Rachel and Eric's perspectives are on that, and possibly provide a solution for that.
I could take a stab at that. And DeForest, thank you. I agree that at the earlier stages, it is a hustle. It's a lot of grind. You're doing a lot with very few resources, and it's some really hard work. I don't know if it's easy at the later stages, but you might have more resources and a team to do it. But it's certainly hard to get things started. At the Alliance, I mentioned briefly at the outset that we kind of have a growing VC kind of network that we're involved with. And because Southern California is dominated by seed investors, there's a lot of seed investors that are on that council. And Rachel and I have really tried to get this program kind of dialed in to not only help those VCs that are writing Series A checks see the deals that might interest them if they're in Southern California or they're nationwide, but we also want the seed VCs, the investors that are writing the early stage checks, to refer their companies, whether they're hitting their metrics or not. We want to see them because we really want to democratize access to funding in this program. And so sometimes people flounder or have some trouble. We want to see if we could help them. And we're asking for their deal flow, because we have a much wider pipeline than most people, with 400 plus active VCs that are engaged nationwide in this program. So sometimes it just comes down to fit. Like, to go back to Rachel's analogy with the Bachelor and dating. I mean, maybe people, an investor and a founder may not have chemistry. They might not be a match, but you know what? There's another investor that might be right for you. And I think with a larger network, we might have a better chance of finding the investor that's right for you. So that's it's a work in progress, but that's what we're continually trying to do.
And I'll add to that as well. From seed to Series A, that's where a lot of the work does come in, right? Because seed, you've validated your idea in a way, but as you're continuing to find that product market fit, I mean, that's where, that's where the the glory is in terms of, getting to that point. And I did a talk at USC's Viterbi Startup Garage, and I have a presentation on going from seed to Series A. I'm also happy to share it here. It's a PDF, and if anyone wants access to that, I'm happy to share that as well. So just feel free to reach out there. And there's a lot of great resources here within Southern California and different organizations that can help you along that journey. So yeah, feel free to reach out and ask me.
Thank you both.
Great, thank you so much. Thank you. Before we conclude today's event, if anyone has any last second questions, feel free to place them in the chat, but I don't see any other questions. We are finishing slightly early today, but that's fine. We'll give you a couple of minutes. Oh, we have one additional question. All right. How do you think the recent move to remote work affects the investment landscape?
Well, we've been hearing from investors increasingly, under the pandemic that, they've gotten much more global, like if not national, global, in kind of looking at deals as kind of geography's been removed, at least in the near term. I think at later stages, it's always been kind of a global game if you're writing kind of, growth capital checks. But at the early stage, it tends to be hyper local, and even angel groups are now writing checks to founders located in places like Canada or overseas, and they're reporting to us that was a relatively new phenomenon. How much of that is going to endure over the long term, I think, remains to be seen. But networks are changing. They are elongating over distance in a way that we haven't seen before. I think VC, venture capital industry, just more generally, is kind of going through a disruptive period. Earlier stage investors are getting into later stage deals. Private equity firms are coming in earlier stage deals. So there's just a lot of capital that continues to be available in the market, and so there are disruptions and changes that are happening. But there's also kind of new avenues too. Venture capital hasn't been the most inclusive game in terms of geography, industry, or certainly race or gender. So I think VC's got to do a better job there, but there's alternative platforms that are coming up, like crowdfunding, that's becoming an increasing alternative, particularly for consumer focused companies. And there's different kind of investment vehicles. So I think it's an exciting time that there's more options than there ever have been. It's hard to say for sure how work from home is going to change the investment landscape. But George over here, I know, is pretty deep on working from home kind of technologies and new innovations around that. He might have a perspective to offer here to the audience.
All right, thanks, Eric. Yeah, I mean, I think the question was about how is it investing? How does the recent move to remote work affect the investment landscape? So depending on what you mean, Elisa, if there's a clarification to that, but I think what Eric was talking about is we're future of work. And so we've been looking about how the pandemic changed who, what, when, where, why we work. And so everything around work and all the opportunities, the problems to solve it gave rise to, and all the opportunities that came out of that for startup founders to found. So we're focused on that space, but also expanding a little bit beyond that and really focusing in on SoCal and LA. I was just messaging Rachel on the side, wanting to talk to her and Eric to follow up, because this is exactly what we're focusing in on is our home base. But I think you might have meant it like, are VCs concerned about remote work? Is that?
Yeah, so I think I wonder more so how VCs view a company that intends to start remote. And also, I guess, has the dollars moved elsewhere because of remote work, which was answered previously by Eric. Thank you.
Yeah, so the short answer is I think that we expect that. I launched Untapped, a venture fund and studio last year during the pandemic. We're all remote. I've not met half of my employees in person yet still. And so I think that it's not a problem. As a matter of fact, Elizabeth Yin from Hustle Fund just released a great blog post called The Decentralized Startup, which says like basically most startups will be built remotely like that. So I don't think that that's a concern, as long as what we want to see is what is the connective tissue and how are you guys working together, and why was it a good match for your co-founders, and then how are you staying connected with your team, and what best in class tools and processes are you adopting, right, and stuff like that. So it's not a disqualifier, it's not a concern, at least for me, and I think a lot of others that I know about, just because the pandemic forced that, and there's a lot of advantages to it.
All right, thank you.
George got me thinking, and I'd like to add a few things to his insights. And I think this question depends partly on kind of what you're building. Sometimes you need to have access to specific tools in a workplace. You know, if you're a therapeutics company, you need access to a wet lab, or if you're doing hardware, you need kind of a machine shop. There's tangible things that you need. Now, if you're doing a consumer-based business, maybe an internet connection is all you need, and you could be basically anywhere. So in some respects, maybe place is less important than it was, but networks will always matter. And networks, because that's really how you get connected and to resources. Networks tend to be kind of localized, right? Like if you've grown up in Southern California most of your life, your network's going to be predominantly in Southern California. Now, if you've lived abroad and moved around a lot, maybe you have a very diverse global network. But I think most people have networks that are kind of tied to certain geographies. But even if those geographies are kind of not always in the same place that you reside or live, and people are making different choices, but I think those network connections will be kind of the keys, whether it's connections to talent, connections to investment, or other things that startups need.
I'd like to add to that as well. We actually had an application come in for a company that's focused on global hiring for distributed remote workforce. And so, I mean, you can see this as an opportunity, right? As a founder and entrepreneur, what opportunities can be developed around remote work? What companies can you create, around this? So I see it more as an opportunity and an advantage for scrappy and smart entrepreneurs.
Thank you all for the feedback.
I see we have one more question in the chat. The question asks, what are some links to the net, or sorry, we received two questions. So the first one's asking any recommendations to good books for people who are just starting in the industry, or even any YouTube channels that you would recommend. And I could start with one that I know of. We have monthly Tech on Tap events, and I'll just place it right now in the chat. We've had many previous Tech on Tap events where the topics have related to startups, the startup community, how to begin a startup. There's several topics that might relate to what you're looking for. So I just put that link in the chat. You might find that resourceful. But I'll pass it to Eric or Rachel if they know any specific YouTube channels or books that they could recommend.
I don't know YouTube channels per se, but I mean, one book that I love, but it's more focused on ecosystems, is Brad Feld's Startup Communities, which is really kind of really important for the work that we do at the Alliance. And Brad Feld, if you're not aware of him, he's been a successful VC and startup champion, and started Techstars, and kind of lots of ideas around ecosystems. So I really love his work. It's a little bit more for people that are connectors rather than startup builders. If you're building a startup, I think the Lean Startup is pretty amazing. But there's a lot of great books out there I don't know if Rachel, if you have any suggestions. I know you're a book lover.
I was gonna say, the lean startup, Eric Ries is like the Bible, right? Peter Thiel, 0 to 1. YouTube channels, Jason Calacanis definitely comes to mind. Gary Vaynerchuk, he's great in terms of just really understanding what early stage is, like getting your idea out into the world and how to qualify that. So, and also even like motivational channels. Evan Carmichael is another great one. Yeah. I see. And then there was another chat here, raising seed capital. So our program doesn't identify or help specifically at the seed level, but I would encourage for founders is to, there's plenty of online resources where you can look and find seed funds, seed investors, accelerators, and incubators. I put a link in the chat here as well, and I can repost it. And it's all great startup resources. So in terms of, depending on what industry that you're building in, and then identifying who are the seed investors in that industry, and then making the match.
These are great resources, and thank you for everyone in the chat that's adding in some books or YouTube links or just in general links. I really appreciate that. I see Irina Kukayeva. I was speaking about previous Tech on Taps. Irina has provided a Tech on Tap series, an episode on product market fit. I'm also including that YouTube link so that you could watch that video if that's interesting to you, or if you're more interested in learning about product market fit, you could definitely learn more in that Tech on Tap. I'll give it a couple of minutes. If anyone has any final questions, feel free to unmute and directly ask us, or feel free to use the chat feature. I'll give you a couple of minutes to type that or to ask. But if that's all, we'll begin concluding the event. I'll give you a couple of minutes. And thank you, Rachel. I see that you've included a document for startup ecosystem. And someone had asked for the Eventbrite that's also in the chat for the what investors look for Eventbrite. Thank you, Rachel, for including that as well. I believe this concludes our presentation, the Tech on Tap. But before I conclude, first of all, thank you all for your questions. Before we conclude, I would like to make a quick announcement, and we can't forget about the prize giveaway. I want to thank you all for attending today's Tech on Tap event. If this is your first Tech on Tap event, Tech on Taps are hosted by the City of Glendale on a monthly basis. At these events, whether they be virtual or in person, you will have opportunities to hear from well-established professionals such as Eric and Rachel, and to network with individuals from various tech-related sectors. I also want to thank Eric and Rachel for their very informative presentation. Thank you again. I'm going to place their contact information in the chat, and I'll do that right now. This way you could connect with them if you have any questions. And I'll also include mine as well. If you would like to hear about a specific topic at a future Glendale Tech on Tap event, please feel free to let me know. Or if you'd like to speak at one at a future event, also feel free to let me know. I mentioned this earlier, but I want to emphasize it one more time, because I truly believe this is a great opportunity for any tech professional, whether you're a student, founder, or a funder. Glendale Tech Week's final event will be held tomorrow. This event will be the Pitch Fest and Closing Awards ceremony. It will take place in person at Hero House Glendale. That will be from 4:30 to 8 p.m. Pacific Standard Time. Or you could join us through our live stream on our social media platforms. I'm going to quickly place that link and the information in the chat. So if you haven't reserved your ticket, feel free to do so. As soon as possible, the seats are limited. And even if you haven't pitched before, this is a great opportunity to see what a pitch looks like and to hear other pitches. With that being said, let's quickly do the prize giveaway before we end today's event. As a reminder, if your name is called, you must be present on the call in order to receive and claim the prize. So I'll quickly share my screen. What we have over here is everyone's name that is currently on the call or that joined today's call. Everyone's name is here. I double checked. If anyone in the next couple of seconds can tell if their name is not here, please feel free to let me know. But I'm going to click this button and we'll find out who the winner is. So let's do that. And the winner is, drum roll, Jerry Power. Congratulations, Jerry Power. You received our prize giveaway for today. If you are on the call, please stay at the end of the event so that we could connect. I believe you are on the call. Saw your name earlier. Yep, I saw the chat. Perfect. Please stay at the end so that we could connect. But for everyone else, thank you so much for joining today's Tech on Tap event. Again, thank you so much, Eric and Rachel. It was very informative. We hope to see you at our future Tech on Tap events. Thank you, everyone.
Thank you, City of Glendale. It's great seeing everybody.
Thank you.
Thank you, everyone. Thank you. Bye-bye.
Thank you.